Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we are going to be talking about how to grow a dividend account to $100,000. So I hope you guys enjoy it, and if you guys get anything in value, hit that like button and subscribe to the channel. If you guys have any questions or concerns, go ahead and ask them in the comments. And if you guys want to learn more about investing in the stock market, go ahead and check out my course, and you guys can use promo code DIVIDENDS to get 50% off the course. So at least check it out. So now guys, let's jump into it. Roll that intro. Hit that like button though. Hit that like button. Roll the intro. Let's go. Bam. So now, what is a dividend and why do companies pay a dividend? Well, imagine if you have a company that makes so much money, they will pay their investors in the forms of dividends. So you'll get a cash deposit on your broker's account. Now, me personally, I think it's always smart to set up DRIP, which is a dividend reinvestment plan. So what that means is a company will pay a dividend and you will automatically take that dividend and reinvest it right back into the company. And you'll start this thing called the snowball effect and compound interest. You guys can clearly see the difference between reinvesting your dividends and not reinvesting your dividends in the long term. So it's always smart, reinvest your dividends, it will pay off in the long run. Now, why do I love dividend stocks? Well, first, they've outperformed non-dividend stocks. So that's really cool too. So it's kind of like a little defense in your portfolio and you're gonna be getting cash payments. But why do they outperform non-dividend stocks? Well, it's very simple. People are less likely to sell a stock that's actually paying them cash. So it's very simple because people are more likely to sell a stock that's not paying them anything. Also, another thing is there's no law stating that a company has to pay a dividend in the future. It's just a little incentive a company will do to get more investors. So what are some things to look for picking and choosing dividend stocks? Now, the very first thing I like to look for is called a payout ratio. A payout ratio is a ratio to judge on how much money a company is paying to their investors. And if you have a company that's paying 100% of their payout ratio to investors, that may seem like a good thing, but it's not. The reason why is because there's no leftover cash to actually grow the business. And most of the time, these companies are going to be taking on large amounts of debt to get through a hard time. That's why you'll have a company like Ford take on billions of dollars in debt because they don't have enough capital because their dividends are too high. Now, the second thing I like to look for is a long, reliable history of dividend payments and dividend growth. This is why a ton of people like myself love dividend kings and dividend aristocrats, because dividend kings are companies that have been paying and growing their dividends for over 50 years. So these are going to be companies like Coca-Cola, Johnson & Johnson, Procter & Gamble, 3M. These companies are dividend kings and some of those are dividend aristocrats. But a dividend aristocrat is still a company that's been growing a dividend for 25 years, so it's still very, very strong. And the reason why I love this is because these companies have gone through recessions. They understand how to get through and why it's important, things to do in the business to make sure that they can get through a hard time. And most of those companies are actually essential companies, so they do good whether it's a bull market or a bear market. People still have to buy and use their product. Now, if that's a picking and choosing different dividend stocks is overwhelming and you don't understand how to diversify, don't worry, it's nothing to be overwhelmed about because they have dividend ETFs. Let's just look at one. Ticker symbol VIG. This is Vanguard's High Dividend Appreciation ETF. So what this means is they have a ton of awesome holdings that pay dividends. So you have diversification, you have dividend payments, and you can really just sit back, relax, and let those dividends come in. So now that we kind of have a good idea and a good understanding of what a dividend is, some of the things to look for picking and choosing dividend stocks, what's the next step, Carter? How can I grow to $100,000 in my dividend portfolio? Well, at the end of the day, the younger you are, the more money you can make in the future, because one thing that people can't get back is time. So if you are 18 years old watching this video, start investing your money. Let's break down some numbers. So if let's say you guys can set aside $100 and then $100 per week. So you can start off with just a $100 investment and then you can invest $100 per week. So the biggest thing with this is you're just gonna automatically just invest it in the S&P 500. The S&P 500 is a index that's been around for over 90 years with a 9.8% return, and you get dividends from it, so you can't beat it. So yes, on average, it gets around a 9.8% return through all the recessions and all the depressions and all the bull and bear markets. It's done pretty well. So if you can invest that $100 for 11 years, guess how much money you will have? Over $106,000. And if you are only 18 or 20 years old, you will have over $100,000. It's actually around $106,000 in your stock market portfolio. And if that say it has an annual yield, a dividend yield of 3%, that is $3,000 in passive income. You don't have to lift a finger to get that money. So that could be a free car, that could be a mortgage payment, that could be a variety of other things that you can use. But me personally, I would just still have drip set up, and you will never have to invest your money again when you retire. So now a lot of dividend investors get upset or discouraged, and really a lot of investors in general, because they're not making hundreds or thousands of dollars per year from dividends. But you're starting that snowball, and you're gonna push it down the hill, and then it's gonna get momentum. It's gonna get that drip, that compound interest, and it's gonna get bigger and bigger and bigger. So if that's say you're only getting $10 this year in dividends, maybe next year it's $20 or $30, and then the year after that it's $50 or $60, and then $100, and then you're just getting bigger and bigger and bigger. And then in a couple years, in a decade, you're gonna have a lot of money just coming in from passive income. And if you even really wanna spice it up, open up a Roth IRA account, which is a retirement account, and you will not have to pay any money when you retire. So the biggest thing, guys, starting off as young as you can, just start and just be consistent. But I hope you guys enjoyed it, and I hope you guys learned something. And if you did, hit that like button and subscribe to the channel. If you guys have any questions or concerns, go ahead and ask them in the comments, and we'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and stay safe out there. Take care, guys.